What's going on, ladies and gentlemen? Welcome back to another trade recap video. So we're going to recap all these trades. Today was a pretty active day. I mean, normally I trade quite a bit based on my style and how I trade. But today I traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 tickers. 10 tickers, all right. And we're finishing the day up just about $2,300 almost. All right, so we'll start here with big. So first and foremost, it's an earnings report move. And if you guys look, obviously the stock's up pretty big to begin the day anyways, okay? So we'll go through this. Didn't really trade it all that great. So not going to lie, I've traded big before on earnings reports, and typically it doesn't trade the greatest for momentum, and I still try to go ahead and attack it. And based on the way I trade, normally do market orders. Last couple times I've traded big, the market makers aren't really too friendly on the stock, but again, I still try to go at it, right? So we'll take a look at it. So first trade I made here on big was once we got over this $24 mark, basically the pre-market high. So I jump in 500 shares on this green candle after we had this red candle and this little green candle kind of test the pre-market high, and we held. So I jumped in 500 shares. Okay. And then this candle here that's red, I ended up closing out the trade on it. But before it went red and before I closed out the trade, it was actually pressing really nicely in a green fashion. So I added another 500 shares anticipating we get a break and we push up. It doesn't happen, and it starts to come back down, and so I close out the trade. So this one I did get shook out on. But again, from past experience from trading big, right, I have this, mindset, and I have this idea of how it's probably going to act. And so that's part of the reason why I took the trade off, was because of past times I've traded big, and I didn't feel comfortable holding it as that candle was coming down. We already struggled to break out in the first place, so I was really questioning after I got in whether or not the breakout was legitimate. But anyways, I get faked out, ended up losing, it was like a couple $100 or something like that, or $100. And then later in the day, as we're coming back down to that 24 level, I'm like, okay, we're going to break this 24 level, the breakout level, and we're going to kind of crack down. So I took a pretty decent size short, 2,000 shares, 23.85. It pushes down, and then I could feel that it wasn't going to go much further, so I covered up the 2,000 shares at 23.74. So I got in at 23.85, pressed down, and, I was trying to take it off pretty low, and as I'm pulling out, the market makers popped the stock up. So I ended up making like $200 in that trade or something. So all in all, I ended up making $91 in total there on big. All right. Today was an earnings report day for me. Then Domo, I traded Domo unsuccessfully today. So first trade here on Domo in the morning was a short. I kind of watched it pop up. It was getting a little weak, and I thought we'd get just an instant breakdown on this. So I got short 1,000 shares on this candle here at 23.07. And this candle goes all the way down to 22.84. So I'm green on that trade at one point, pretty decent, and it just wasn't moving. I could feel that it was probably going to squeeze. So then I end up covering up those 1,000 shares at 23.25, so about 20 cents over my entry. So I was part of the reason that this stock squeezed up, because I had 1,000 share position short, and when I realized it wasn't going to go in my favor, I had to cover up that position. So I myself started to help that move up by squeezing out my own short position. So that's why I'm getting taken out pretty much on the top of that candle, right? So I cover up, they squeeze the stock up, and it squeezes, right? So lose on that trade. Okay. And then we come over here, and I did a 2,000 share buy anticipating we would bounce off this support, and we did, but it was lackluster, and I could kind of feel that it wasn't going to work. So I got in 2,000 shares for a bounce at 22.85. It pops up. And again, if you look at it in here, it started to really do like a bear flag. Let me put on some trend lines for you guys. So then it kind of starts doing a bear flag, right? And so, I get in on this candle. And the reason I got on this candle here, this little green one, is because it actually rolled over and went really bearish and looked like it was going to turn into a nice short. And once I seen it turn over and then it gets sucked right back up, I was like, oof, we're going to squeeze out those shorts that tried to pile in on that candle. Well, that's what I thought was going to happen. Then we kind of led into a bear flag. And when we have this candle breakdown, I'm not going to risk this being a legit bear flag, crack, go through low a day, tank on a 2,000 share trade. So take off that trade at 22.82, losing a little bit, right? Then later in the day, I do a breakdown short. So I get short on this candle. We break down. I'm up a couple $100, and then it squeezes right back up. Actually, let me rephrase that. I get short for the breakdown here, right? I got in on a bounce, realized the bounce isn't working. So then we start kind of rolling over. I'm like, okay, we're going to go short below the low a day, get a nice breakdown. So I get short on this candle at 22.36. We break down. And so we got all the way down to 22.51. So I was up, about $200, maybe a little bit more at one point. And then I held it, I was like, let's see if we can get a little bit more. And again, you look at that, it's not a good trade. Even if you got short here and covered up on the bottom of that candle, it's not really a good trade or something to be proud of anyways. You shouldn't pride yourself on that. So I could have taken some off, but I didn't. Next thing you know, candle kind of pops up, and guess what? Connor, myself, have to cover up 2,000 shares knowing we're probably going to squeeze back up, and I'm the one that helps create this squeeze. So you can see I get short at 22.63 and get squeezed up to 22.81, which is like right here, right? So I was part of the reason that we had that squeeze candle come up. So I lose on that trade. And so what I was really looking for was a breakdown. Guess what happens later? Boom, snap. So that's kind of what I was looking for right there. So I timed it wrong is all that happened there. So I ended up, losing $621 on Domo today. Not good. All right. Then we got Netflix. Netflix threw me a curveball pretty heavy today. So you might not be able to tell because it, a lot of people don't classify some of these as bull flags, but ideally, let me take off the trades for a quick second. So I lose $225 today on Netflix. So it's like all the stocks I'm showing is like, damn, no good trades, right? So we have the move up, and I'm going to try and map this out as best I can, but this is arguably a bull flag. It's like a consolidation bull flag. You don't really have a big move up and then a consolidation. You really just have straight consolidation. And when they look like this, they can lead into really nice moves. And so if I were to draw this out, there's kind of like an in or a head and shoulders pattern in here, right? So we kind of go up, inverse head and shoulders. We go up, then we kind of put in this low point right here, right? And we go back up, all right? So you kind of have this inverse head and shoulders formation occurring, right? And going back up here. So pretty much as long as we would have got like the break over these top candles, we would have had a nice move. So anyways, I get, let's put the trades on now. So I get long on this candle. I'm like, maybe we'll break up on this candle, but it was still a little bit premature. So if I'm ever jumping in on something I believe is premature, but might go, I'll take lower size. So I only popped in 100 shares on this candle here. Then we kind of break down, and guess where this red candle comes to? The previous kind of red candles over here, kind of confirming that inverse head and shoulders formation that I liked. And then I thought we were going to break up and kind of break out here, so then I added in another 100 shares. I had a total of 200 shares. What I forgot to look at when I was taking this trade was the volume. Let me pull this volume up, right? So look at this, right? Let me zoom out maybe a little bit too. So as I get long in these candles here, look at the volume. Nobody was buying up this bounce and this move up, right? No one. So that right there kind of should have told me that, there's not a lot of volume buying in on that move. Probably not the right time to add. And then just instantly just like massive candle down. It's like, okay. So once we got this big beat red candle down, at that point that the formation you were trading, it's gone. So take the trade off, basically lower this candle and lose $225. Okay. On to the next one, PGNY. This one was a little bit light on the volume. Trade almost was really good. So this is, again, very similar to what I just showed you, which was on Netflix, right? So on Netflix, when we were just looking at that, again, it didn't really have a big move up. It just started in consolidation. But again, if you think about what we were just looking at on Netflix, and then you look at this here, it's almost identical, just a little bit different. So see, we start with this big move up, and then what happens? We kind of pull back, ready? We pull back, all right? Bounce back up, then we make a new low here, then we bounce back up, right? So we're creating an inverse head and shoulders pattern in this move, which is a bullish formation, right? So again, that's pretty much the same thing we're looking at for Netflix earlier. So I get long 1,000 shares here. at 31.43. I hoped that when we started to break up, more volume would come in and press the stock higher. And so I get long for a breakout trade here, 1,000 shares at 31.43. It pops up to a high of 32. So I was up like $400 at one point. But again, with the volume and the spread, it was very hard to get the shares out at 32 or even close to 32 on the ask with the light volume that was here. So I ended up taking some off, a little bit on the ask, and then I ended up having to market out majority of the order. So going from a potential $400 trade to only $145 because of the trade was not right. It just wasn't a good enough trade to break out and create a big move and with enough volume to take off the shares the way you would like. So you manage it as best you can, and I was able to walk away at the $145 there. All right, Roku is the next one. Roku I traded later in the day, kind of came home after running to the post office and the bank, and I was like, there's a trade to be made here. So let me delete all these drawings and even all the trades because I was just like sizing in small like crazy. So this is also the benefit of having free commission. So, right, if we look at Roku on a 5-day chart, you're going to see that there was like a support here. Right, so it broke the support briefly. So I anticipated we have at least some type of bounce here off that previous dip from a couple days ago, right? So let's go and look at it again. So I'm pretty much explaining the same pattern over and over again. Look at, there's an inverse head and shoulders pattern. We move down. Wait, is it this one? Or yeah, they're here. So we move down, bounce up. I don't even have to take the trend line that long. Let me just do it like this, right? So we have the move from here, down, bounce, new low, bought back up, hits resistance right here, right? Comes back down to the previous bounce, so the previous support, goes up, we get the break over this resistance, and that's where I'm starting to sell. So let me pull this up. And again, it still, not the greatest move ever, but we managed it. Right, so you'll see I started sizing in here, but small, right? You can see there are 20 share buys, 20 share buys, 20 share buys. So not really big because that's a first attempt. So it might break out, but since it's not the ideal setup, I'm only going to go small size. That way, if I'm wrong right there, I'm not getting crushed. And you won't be able to see all these buys unless I like shrink the chart like this and it makes it all weird. So anyways, I do a bunch of 20 share buys here. We go down lower, testing that support, and I go add 60 shares, add 20 shares, and I'm just adding on all these dips, right? Adding on all the dips, and you can see I start increasing the size of my adds as I'm becoming more confident that I'm correct that this is an inverse head and shoulders that will break up, right? So I'm going from 20 share, 20 share, 20 share, 60, 20, 40, 20, 20 to a 20, 140, 140. So I start buying in like 140, eventually get up to a position of 540 shares. So we break up here, and I think I was up like maybe close to $400 at one point. So you can see I'm sizing all the dips. We get the breakout. I sell 440 shares, sell 20 shares, and then I added some here on this dip thinking that we might continue that trend. But again, I only added 40 shares because we've already made a decent move and we've already trended kind of higher. So I'm not going to add in a bunch of shares after we've already had somewhat of a decent move. So I add in 40 shares and it breaks down. At that point, I realized that this short-term bullishness is probably being lost, and I close out that trade. And so I result in, a P&L of 225 on Roku there. On to the next one, which is Sage. Sage worked, again, well, but didn't have follow through. Hold on. Jeez. Like, when did I ever enter an F? I didn't do any of that. Yes, that's the one I want. All right, so Sage is pretty straightforward. It's a bull flag. It's pretty much the same exact thing that we've been doing, right? You have the move up. Yeah, this isn't exactly the same. But anyways, you have the move up, bounce down, bounce up, back up, back down, back up. So you're trending up higher towards the resistance level. So it's a bull flag breakout over the whole dollar mark of 65. So I'm like, this had some crazy momentum the other day. We could have some more crazy momentum today. So as we're getting close to that breakout, I go long just before it, 1,000 shares at 64.99. We break out over 65. We pop up almost all the way to 66. So I'm up close to 1,000 shares. But again, this stock is pretty spready. So I ended up only getting out 700 shares at 65.56 and then 100 shares at 65.18. And then I can realize that this is not going to continue moving. We're getting weakness below the 65 mark as we're trying to retest that breakout level. Close out the last 200 shares, ultimately make $425 on the trade. Again, if this would have broke out, had follow through, continued, it might have popped $2, right? Close to, it could have been like a $2,016, $1,400 trade, but we didn't get follow through on the trade. Okay. Alta was a trade I made later in the day. Let's go to it. So I didn't trade any of Alta in the beginning of the day. I missed the moves. I was trading other things. All right, so we got Alta here. Pretty straightforward. Again, so this is the opposite of what I've been showing you. I've been showing you guys inverse head and shoulders pattern setting up in bull flags. This is a long-term developing head and shoulders. So again, a head and shoulders looks like this, and it's bearish, okay? And, a inverse head and shoulders looks like this. It is bullish. Or wait, what am I doing wrong? There we go, like that, okay? That is a inverse head and shoulders pattern, okay? And ideally it would break and go this way, and head and shoulders will break and go that way. All right, so let's delete these drawings, blah, blah, blah. All right, so what do we see here? We have the inverse head and shoulders pattern. Or, god damn, I'm saying this so much, I'm losing myself. So we have a head and shoulders pattern. Ready? Boom, boom, boom. Down to support. Remember what I said? Inverse head and shoulders patterns look like this. Okay, so inverse head and shoulders. So I start buying the dip, buying the bounce off this previous support. So I get in 100 shares. I didn't mean to sell those 20 shares. That was an accident. I actually meant to buy 20 shares, but I sold 20 shares. Anyways, so I get in 100 shares, and I buy another. So we pop up. I buy 100 shares. We kind of dip down a little bit. I buy another 100 shares, and then we kind of start to break up. And then I start closing out 150 and 50 shares. So I make $147 on the trade. So why did I close out the trade right here? Because we were getting back to the top of that that head and shoulders pattern, right? And then look what happens. So again, look at, like as I've drawn it, as I was showing you, head and shoulders looks like this. Okay, and how did I trade it? Inverse, or fuck me, sorry. Head and shoulders, up, down, buy the bounce, sell the top near the resistance, as I did there. And I was actually thinking about shorting it, but I was like, whatever. I already made a good amount of money today. You don't need to trade anymore, and let's just not do it. So I make $147 there on Alta. That was cool. All right, YEXT, we traded. Didn't trade any of the long move. I was busy looking at other things, but I did mention this as a long in our private group a couple times, and I know some of them ended up trading it. So we'll walk through all of these. So again, I traded a inverse. God, nope, damn it. It's a head and shoulders. I trade a head and shoulders pattern here. Ready? So again, you have like the move up, top, pull back, up, head, down. It's kind of a funky one, but you can kind of see it, right? So you kind of have the head and shoulders there. So I actually tried to get short, like I think it was like 2,000 shares, but they just weren't. It was a market order, and they're not filling me. So it's like at that point, if a market maker is not going to fill me a market order very easily, then I'm just going to cancel it. So by the time I canceled it, they filled me 300 shares. So I had 300 shares, and it just rolls over, and I take off the trade. I think I won like $40 on those 300 shares. Got short at $13.95, covered up at $13.84. All right, so then later in the day, I do a bigger trade looking for a breakout. And I know that at this time of day and these earnings plays that we have are less likely to break out, but sometimes they will, so you give it the attempt, right? So do you guys see it again? There's pretty much any time you go into a bull flag or like a bullish breaking out pattern, there's normally going to be an inverse head and shoulders formation within the pennant, right? So the pennant, right? A pennant looks like this. It's like a move up, and then you'll have something that looks like that, right? And then normally in that pennant, so let's do it normally in that pennant, what's going to happen is it's going to pull back, right? And then it kind of does like a little bounce, and then it'll come down like that, put in a new low, then it'll come up like this, and then it'll go down like that. Well, that wasn't good enough. We got to go up a little higher like that. it'll come down, hit that support, then it'll kind of curl like this as it's just about to cross the trend line, and then you usually get the big pop. All right, so let's draw it out. We have the move here. Then we kind of go up, and we go down to here. And then this is kind of awkward, but we'll go up to there. All right, and then we have the move down to where? To your previous support. So I see that it holds. I can feel the curl, so I end up getting long 3,300 shares here. We press up, kind of feeling the weakness. So then I end up closing out the trade. So I get in 3,300 shares at 14.17, pops up. I take some off, take 1,500 off at 14.24, and then I close out the rest. So I close out the whole trade at 14.24, resulting in a total of $269 on that stock today. Traded Zoom in the morning, earnings report. So I got short Zoom, right? So we open up, we squeeze, we have a really bearish candle down, then we have a strong bullish candle back up, and then we just kind of start trailing down. So I'm like, maybe we'll get a nice kind of roll down, and this will turn into a big short, right? I'm like hoping. So I get short 1,000 shares at 63.37, right? This candle kind of pops up. Then we get a really big candle down. I'm like, yes, we're about to smack down. So we smack down, and then I cover up 700 shares at 63.21, and then I could just feel that it probably wasn't going to continue. So I end up closing out those last 300 shares as I get squeezed up on this candle at 62.88, resulting in $301 on that trade. And the last ticker we'll cover is Zoomies, which was my big win on the day. It was a short. So Zoomies is an earnings report, kind of breaks up in the day, squeezes up, right? So we have a couple candles up, and it's just really weak, right? If you looked at it, it just seemed really weak. So we get this push up, right? Look at the volume. Let me pull this up a bit. So we squeeze up 1, 2 candles, right? Then look at what happens to the volume. It just turns into beat red selling volume, right? And then if you look at this, like, all right, so then we kind of break down the VWAP, and you see this green candle in here. Some would be like, okay, we're getting ready to bounce. And then look at the volume. It's a decent volume bar, but then shortly after your next candle, the volume increases to the red, and it beats out the previous green. So it's like, this is most likely going to go down, right? So I go short 2,000 shares on this candle, get in at 34.12, hold, slams down. So we go from 34.12 all the way down to 33.18. I cover up 700 shares at 33.84. And then I cover up the last 1,300 shares at 33.11, resulting in a total of $1,500 there on that trade. So resulting in an ending day P&L of about $2,200. So really solid, not the greatest trades. I mean, that was a good trade, but, that's a lot of what trading is when you're a day trader, right? You're pretty much, your job is to trade stocks intraday and try to track and find moves that are going to create momentum and hopefully move in your favor, right? And so you're not always going to pick the greatest winner on the day. All the trades you take aren't always going to result in the best win on the day. You're not always going to be able to hold every single trade and make a monster win. And so you guys seen, like on like YEXT, on Domo, on Big, right? Like I've made multiple trades on stocks and half of them weren't even that good, right? So, excuse me, you're not going to always make a good trade. But the most important part of your job, besides making money, is being able to manage yourself throughout the day. So, like Big, for example, like that's not the great. Yeah, I mean, I guess it could be a good example, right? Let's go look at Big. So, like when I got short, right? So I got short, right? It breaks down a little bit, but then ultimately it didn't turn into a good short, right? So what if I did like the whole hope and pray thing, right? Like I get short, I'm like, oh, well, maybe it'll come back, and then look, it just keeps going up, right? I would have got smoked, all right? So being able to understand when you're wrong, you try to trade, you're wrong. You have to be able to admit to yourself that you're wrong. So, like when we're live or, in chat and I make these trades and some of them aren't good, to me, it's like, I don't want to look like I don't know what I'm doing, right? I don't want to take bad trades and have people go into bad trades either, but that is just part of the game. And you have to be able to understand that. And when you do make a bad trade, you have to be able to recognize that you're wrong and just take it off, accept the small loss. Don't try to hold it, think it's going to come back for you. So a lot of the battle day trading is going to be managing yourself throughout the day. You're not going to have the best trades. You won't always have the best trades. Some days you'll trade amazing. Some days you'll trade poorly, but you'll have to be able to manage your good and bad trades throughout the day so you can end with profits of $2,200, right? So that your losing trades are smaller than your winning trades, sort of that mentality there, right? So like neither of these trades were good, right? We go up, that's not good. I take it off quick, small loss. This trade goes down. I could feel that I'm probably not going to be right for much longer, so I take it off, create a small win. So the more and more you trade, the more experience you get, the more you're going to learn, right? And so you guys see I traded 10 tickers a day, right? So trade 10 tickers. It's kind of a lot of trades. A lot of people are like, oh my gosh, you're over trading. You know, over trading is a thing, but it depends on how you define it, right? Over trading is only a bad problem if you're losing money, right? Like, why would anybody stop going to the casino to the same slot machine if they're constantly winning over and over and over and over and over and over? You know what I'm saying? So over trading is a thing, but it's only bad if you're losing money or you're not a consistently profitable trader, because if you overtrade, a lot of times it'll lead you into losses. But before you get to over trading, you normally start by taking losses. Normally a trader will trade on the day, he'll make a couple trades, he'll lose. Or he'll go make a trade, go green, and then he'll go red after another trade, and then he gets frustrated and mad that he's now red or lost his profits on the day, and he'll make another trade trying to go green. And then he builds himself into a bigger hole, and now he consistently keeps trading to try and win back his profits, which is a problem. Now you're into revenge trading and over trading. So over trading is a thing, revenge trading is a thing, and they go hand in hand. You usually don't have over trading unless you have revenge trading. So again, you usually don't lead into the problem of over trading unless you've already kind of sucked on the day, shall we say. But again, if you made $1,000 on a trade, $1,000 on a trade, another $1,000, another $1,000, another $1,000, another $1,000, another $1,000, and you made 25 trades on the day and made $1,000 each time, who in the hell is going to tell you not to trade that much if you're just smoking and killing every single trade? Nobody. They're going to be like, Buck, trade as much as you want, homie. You're killing it, right? So that's the thing, is over trading becomes a problem when you're not making money, right? And that's usually going to lead you to more losses. Okay. And the whole reason I started this little spiel at the end of this video was to get across the point. I always explain the importance of trading and getting into this game. And a lot of new traders always ask me, they go, Connor, I don't have a lot of money. I can't afford to trade the large cap stocks. I need to focus on penny stocks. Boom, you're most likely going to lose money. Why? Because your mentality is, I'm trying to make money. Your mentality is not, I want to learn this business and I want to learn the markets effectively so that I can be a consistently or a profitable trader or just make money in general. If you don't give yourself the opportunity, the time, the chance to properly learn and experience the market, you will never have enough time to become successful. It is harder to trade penny stocks as a beginner than it is large cap stocks. So if it's harder to trade a penny stock than it is a large cap stock, you're most likely going to lose. And if you don't have a lot of money to start trading with in the first place, if you trade those penny stocks, and I'm not saying they're not good to trade or not bad to trade, and I'm not saying that you shouldn't trade them. I'm just saying there's a process to which you should start trading them. And if you don't have a lot of money starting off when you're trading, and you trade them, and you lose all your money, it's going to happen fairly quickly, and you now have not given yourself the appropriate time to learn the market, and now you think it's rigged or it's impossible. Flip it around. Connor, I don't have a lot of money to start trading. I can't afford large cap stocks. Let me help you. Let's think differently. Yes, if you trade large cap stocks with the amount of capital you have, you're probably not going to make that much money. And I know you've come to this business and you've come to this game to make money, as we all did and as we all want to. But if you don't learn it correctly and you don't take the time to learn it, you're not going to make any money. So what I'd rather you do with your small amount of capital is trade the large cap stocks. Get comfortable with how stocks trade, with how patterns form. Learn volume, learn candlesticks, right? And take trades, because the more you trade, over trade, like Connor traded 10 tickers a day multiple times, the more and more and more trades you take, the more you learn. So when I trade when I trade 10 tickers in a day and maybe I'd make, 20, 30 trades, I just got to learn 20, 30 times in a row. Whereas someone like you that maybe is on pattern day trading, you get to trade 3 times a week. So you only get to experience real emotion in live market time with your capital maybe 3 times a week, whereas I get to do it maybe 25, 30 times a day. Times that by 5, that's 200 times a week. I get to feel that real emotion, stress, greed, fear all throughout the week. So yeah, I should probably be a better trader than many traders out there, right? Or just the beginner traders because I've had the experience. You will not get that experience that I have if you just go straight into a loss and don't give yourself time to learn the market. So I recommend to new traders is, you're not going to make money or you're not going to make much money trading higher price stocks with lower capital. What you will do is start training yourself, learning patterns, learning formations, learning why stocks do what they do, right? And then you'll get to experience the real feeling of having money on the table more than just once or twice, right, in a penny stock. You'll get to do it multiple times because if you're not going to make a lot of money trading large cap stocks with the capital you have, then you can't lose a lot of money very quickly with the capital you have. Because if you can only afford, maybe 5 shares of Netflix or something and Netflix goes up, maybe $2 on the day, you make $10. But if it only goes down $2 on a day, you only lose $10. Whereas if you over leverage yourself on a penny stock and it goes out of your favor, you could be losing $400 or $500 real quick. So that you could trade Netflix all week long, all year long without blowing through your capital, and you'll get a whole year of experience in the market. And that's the goal, is to keep you in the market. You always want to be involved in the market. You don't want to come into the market, get smoked, and be like, and then just dip out, because then you didn't learn anything. The only thing you learned is, trading's hard. I just lost all my money, and now I'm scared to come back. It's rigged. It's a scam. It's not possible. No, you just didn't do anything right. You just didn't take the time to learn it, and you blew yourself up, right? So enough of my spiel. Hope you guys liked the video. Hope you learned something new, which I'm pretty sure you probably did. Anyways, that's all we have for you today. And if you guys watch this video, want to join our private group, links are in the description below. There's also a coupon for 20% off. You can join us every single day, and then you can trade live with us, and you can learn to read this price action along the way. Other than that, ladies and gentlemen, everybody have a great weekend, and I will see you guys on the next video. Take care.